Welcome to the deep dive. Today, we're really getting into the weeds on the process controller and automation market.
It's a fascinating area, absolutely central to modern industry.
Definitely. So our mission here is to unpack these global sales revenue projections. We've got data from 2021 looking ahead to 2033.
And it tells quite a story about growth.
Exactly. We want to understand that story. And just for context, this is all based on a detailed market report, giving us some solid numbers to work with.
And these process controllers, for anyone maybe not fully picturing it, they're like the brains of the operation, right?
Central command.
Precisely, coordinating everything from temperatures in a pharma plant, maybe flow rates in a refinery, or, quality control on an assembly line.
Complex stuff, often running autonomously.
That's the key. And the numbers we're about to dig into really show how vital these systems have become. It signals some powerful long-term trends.
Okay, so let's unpack this then. Let's start with the big picture, the global figures.
Right.
In 2021, the global market was sitting at 44.758 billion US dollars.
Already a substantial number.
It is. Now, fast forward to 2025, the projection is $59.6 billion.
Okay, solid growth.
But here's the real eye-opener. Looking further out to 2033, that number is projected to jump to 105.681 billion US dollars.
Wow.
Yeah, I mean, that's more than double the 2025 figure.
In just 8 years.
Exactly, a doubling in less than a decade. It represents a pretty healthy global compound annual growth rate, the CAGR, of 7.422%.
And that 7.4% CAGR sustained over that period, it's really significant, isn't it?
It seems very consistent.
It's more than just consistency, though. That kind of growth, especially the doubling projection, it points towards something bigger, like a shift from just making small improvements.
Tweaking things here and there.
Right, towards fundamentally re-engineering entire industrial processes. We're talking about building those, fully integrated smart factories.
Driven by data.
Exactly. And process controllers are absolutely essential for that. They're the nervous system.
Yeah.
So it's not just about being a bit more efficient anymore. For many industries, it's becoming about survival, about innovation.
Okay, so a strong global picture. But as always, the story gets more interesting when you start looking at the regions, doesn't it?
Absolutely. The growth isn't spread evenly.
And that's where you see the kind of the engine room of this whole thing, where the real action is.
Which brings us to Asia Pacific.
Asia Pacific, yeah. This is where it gets really interesting. Clearly, the fastest growing engine here.
The numbers bear that out strongly.
They do. So 2021, APAC's revenue was 11.861 billion US dollars. By 2025, that's projected to hit 16.301 billion dollars.
Right.
And then by 2033, it's forecast to reach $30.859 billion. That's nearly triple the 2021 figure.
Tripling, that's massive acceleration.
It really is. And the CAGR reflects a leading 8.305% for the region.
This rapid expansion in APAC, it makes a lot of sense when you think about it.
How so?
Well, consider the sheer scale of new smart factory projects going live there, especially in automotive and electronics manufacturing hubs.
Like, huge sectors.
Huge. And you've got governments pushing hard with incentives, massive infrastructure investments, and just a general drive to adopt technology and boost competitiveness.
So let's dig a bit deeper within APAC. China obviously leads the region in terms of sheer size. It went from $3.748 billion in 2021.
A big chunk of the regional total.
To a projected $9.952 billion by 2033. That's an 8.495% CAGR. Very strong.
Very strong, yes.
But the real standout, I think, for country-level growth, not just in APAC but globally, seems to be India.
Ah, yes. India's growth rate is remarkable.
Highest projected country-level CAGR globally at $9.862 billion in 2021 to potentially $5.277 billion in 2033. What do you think is specifically driving that pace in India? Is it one particular sector or something broader?
That's a great point to isolate because India's trajectory is, exceptionally steep even within a fast-growing region.
Right.
We're seeing really aggressive investment there, not just in, traditional manufacturing, but also in areas like renewable energy infrastructure and smart city projects. Both are really heavy users of sophisticated process control. Plus, there's that big government push, the Make in India initiative boosting domestic manufacturing. It just creates this huge demand.
Makes sense. And it's not just India, is it?
Yeah.
Singapore also shows really high growth 8.711% CAGR.
Also notable, yes, a very technologically advanced economy.
And Southeast Asia, as a collective region, is also forecast to grow strongly at 9.02% CAGR. So it seems like a widespread push for industrial modernization across those economies, too.
It certainly looks that way, a broad regional trend.
So, okay, Asia-Pacific is clearly surging ahead, but that doesn't mean the established markets are just sitting back, right?
Not at all.
When we look at North America, for instance, it's still a major force, a really dominant market.
Absolutely. Still the largest region by value in 2021.
Exactly. In 2021, the sales figures there were $15.307 billion. That's climbing to a projected $19.996 billion in 2025.
Those significant numbers.
And by 2033, the projection is $34.135 billion. It represents a solid CAGR of 6.913%. Still very healthy growth.
And North America's strength, it comes from a mix of things, I think.
Like what?
Well, first you have a very mature industrial base, but it's one that's constantly upgrading to stay competitive globally. Think advanced manufacturing, high-tech sectors.
Constant reinvestment.
Precisely. Plus, there's huge investment in R&D, a really strong innovation ecosystem that drives the adoption of the latest process control tech. It helps keep the market dominant.
And looking within North America, the U.S. is clearly the giant. It moves from $12.062 billion in 2021
The lion's share.
to a projected $26.533 billion in 2033. That's a 6.789% CAGR.
Solid.
Interestingly, Canada actually shows the highest country-level CAGR within North America, 7.503%, maybe driven by natural resources or automotive pushes.
Could be. Specific sector investments often drive those higher national CAGRs within a region.
And Mexico is also showing steady progress, 7.12% AGAGR,
Okay.
reflecting its growing manufacturing role.
Yes, definitely part of that North American industrial ecosystem.
Okay, so let's cross the Atlantic now and look at Europe. It presents maybe a picture of more steady but also quite diverse growth.
Diverse is a good word for Europe, Sess.
Overall figures for Europe, $10.205 billion in 2021, growing to $13.291 billion in 2025, and projected to hit $22.827 billion by 2033.
Okay.
That gives it a KGR of 6.995%. Very similar, actually, to North America's overall rate.
It is remarkably close.
But this raises an interesting question, I think. Given Europe's diverse economies, what factors might be behind the different growth rates we see within Europe?
That's a great question.
Yeah.
Because it's not uniform at all.
Right.
You see powerhouse economies like Germany, for instance.
Yeah.
With its, strong engineering tradition and that big push for Industry 4.0.
They're investing heavily.
Naturally, they're investing heavily in process automation. But then you contrast that with, say, nations that have maybe more service-based economies or perhaps older industrial infrastructure.
Where adoption might be slower.
Exactly. Or maybe it's focused only on specific niche sectors. And then you layer on things like different regulations, government incentives, even investment cycles. They all play a part in creating that variance across the continent.
That makes a lot of sense, and the numbers show it. For example, Germany shows the strongest European growth, 7.658% CAGR, projected to reach $5.205 billion by 2033.
A clear leader there.
The UK is also growing quite robustly, 7.328% CAGR. France, a bit lower at 6.372%.
Still healthy growth.
Definitely. But then you contrast those with countries like Russia, showing a 5.134% CAGR, or Luxembourg at 5.291%. Still growing, but at a noticeably slower pace.
It illustrates that diversity perfectly. Different priorities, different stages of adoption.
Okay, so beyond these sort of established industrial powerhouses, we also need to talk about the emerging markets, South America, the Middle East, and Africa. They're also making significant contributions.
Absolutely. Their growth rates are actually quite strong.
They are. South America shows a healthy CGR of 7.709%. Its market is growing from $2.909 billion in 2021 up to $7.104 billion by 2033.
Quite impressive.
The Middle East isn't far behind, 7.602% CGR, projected to go from $2.372 billion to $5.725 billion in that same time frame.
Significant investments there, especially in energy and infrastructure.
Yes, and Africa's market is growing at 7.105% CGR, moving from $2.104 billion to $5.031 billion.
And looking at specific countries quickly, in South America, Argentina actually leads with the highest regional CGR at 8.252%. Brazil, also a major contributor, of course.
Interesting about Argentina leading the pace there. Yeah. In the Middle East, the UAE stands out 8.264% CAGR. along with, as you mentioned, strong growth in Saudi Arabia and Turkey, often linked to energy and infrastructure projects.
Makes sense. Big capital projects drive that need.
And for Africa, South Africa leads the continent with a 7.673% CAGR. Nigeria also showing notable progress as industrialization picks up pace.
And for many of these emerging markets, it's not just about catching up in a basic sense. What I
Right.
mean, it's often about leapfrogging, skipping older industrial models and jumping straight into, highly automated, efficient operations.
Adopting the latest tech right away.
Exactly. Think about what that does for their ability to compete globally, lower production costs, attracting foreign investment in sophisticated manufacturing, resource extraction. It's transformative.
So stepping back again, what does all this mean for you,
Ah.
listener? Well, I think it means this isn't just some abstract report with numbers.
No, these figures are grounded in real-world shifts.
They point to immense, consistent, projected growth in what is really a fundamental technology. It reflects this tangible, expanding shift towards automation.
Across incredibly diverse economies globally.
Yeah. The sheer scale of this market, set to more than double globally between 2025 and 2033. It just highlights how integral process control has become.
Absolutely. These figures, they really reinforce this strong, undeniable global commitment, a commitment to efficiency, to precision, to technological advancement
Across so many sectors.
across countless sectors. So what this deep dive really shows us isn't just the what, the market size, it's the where and the how fast of this really profound industrial evolution that's reshaping the global economy, driving competitiveness.
It's been a really comprehensive look. I think we've covered the global picture, the regional dynamics, even down to specific country projections for the process controller and automation market.
We've seen the scale and that rapid growth trajectory ahead. And maybe, as you reflect on these numbers, here's something to think about. How might this sustained rapid growth in process control automation actually reshape the workforce?
A big question.
Huge. How might it redefine supply chains? Or even subtly alter daily life, especially in those really dynamic regions by 2033? And what new industries, what new opportunities might just emerge from such a pervasive technological shift towards these smart systems?
A lot to consider there. Really fascinating stuff. Thank you so much for joining us on this deep dive and exploring these insights.